QuickBooks Pro Desktop 2021 deposit form. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitars practice file. We have the home page open. You can open the home page by going to the company dropdown, selecting the home page. We also have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. You want to make sure you have this either collapsed or uncollapsed as whether or not you want to see the open windows or not. I'm going to go ahead and collapse it at this point in time so we can focus down here on the customer section. Remember that the customer section could be called the accounts receivable cycle, the sales cycle, the revenue cycle. That's what we're looking down here at the flowchart. When you're considering a transaction, you want to consider, does it fit into one of these cycles? Vendors, customers, and employees, and then visualize that cycle, what it looks like, and then think about where does it fit within that particular cycle. In this case, we're going to be considering the deposits. And then once you consider where it fits, the form that you will then use, and then what will be the impact on that form to the major financial statements, that being the balance sheet and income statement, and possibly any other subsidiary statements related to it that will be lining up to or supporting the financial statements. So we've been going through this major process here, which is going to be the process of the full like accrual type of system for the revenue cycle or accounts receivable cycle. So at the point of sale, we made the invoice. Remember, there's two types of way that you can basically make the sale. Either you do the work before you get paid, in which case you do the invoice so you can bill the client so that you will then be paid in the future, in which case you will have to track the receivables, or you're imagining a situation where you're getting paid at the same point in time. Often the case, if you imagine a situation where you have the register at the top of the store and you're making the sale at that point in time, these two items then happening basically at the same point, resulting in just the sales receipt type of form that is necessary. Now, both of these lead to basically this point in the process, meaning you can either create the invoice and then once you have received the payment, then you're basically at the same point in the time period as you would be if you created the sales receipt at that point, and then you're going to make the deposit over here. Now remember that these two items are the kind of little bit of the confusing items because these are the two that could be increasing the undeposited funds. We've talked about the receive payments in the past. We'll talk about the create sales receipt in the future, but just note that these are the two items where you're basically getting payment from customer. One at the point of sale, one at the point after sale after having issued the invoice to the customer. So that means that we either put the payment that we get from the customer into that undeposited funds account, some kind of cash account, but we have to break it out between undeposited funds or just put it directly into the checking account. This is different than most people will learn in financial accounting, where they just have cash all grouped together and you just increase cash, right? Here we have to say, well, which cash account are we going to increase? Are we going to put it just into the checking account? And if we put it into the checking account, then we want to make sure that we do so in such a way that it will make the reconciliation process as easy as possible. So we talked about this with regards to the sales receipt. If we're getting check by check then payments, then we may simply just record the sales receipt, putting it into the checking account at that point in time, because we expect it to be reported on the bank statement one received payment at a time, and therefore we don't have a problem with matching. However, if we're going to receive cash payments and we get multiple payments in one day here, or this will oftentimes happen up here, or credit card payments where we have a third party that's grouping those payments in a funny way or in some way that is different than the receipt from the customer, meaning we have multiple customer receipts in some way, shape, or form that will be grouped together when they are deposited into the bank and therefore show up on the bank statement in that deposit form. Then we want to use undeposited funds, these two accounts increasing the undeposited funds so that we can then adjust our deposits over here so that we group them in such a way that they are matched up with how they will be appearing on the bank statement. That's what this number 2 represents. This number 2 represents that we have received money from a customer, either from the receive payment form or the create sales receipt form that has gone into undeposited funds. And then when we select this record deposit, it will pop up if I select this item and show those two items up here so that we can then group them together if we so choose into the same deposit recording so that they will then show up on the bank statement or on our books in the same format as on the bank statement. So I'm going to close this back out without recording it thus far. And then I'm going to close this back out for now. Let's close this back out. So just to review our normal process here, we've got the inventory increasing the sales. The sales was recorded at this point in time. And then it increased accounts receivable. Then, and I would imagine this like being billed out or mailed out or sent out by email. Then we receive the payment either by mail or some other kind of electronic receiving of the payment from the customer, and we put it into undeposited funds. That's the default method. And then we go over here and we actually make the deposit. Now, when you make the deposit, note that this, of course, is when it actually touches the checking account. If you think about anything with like bank feeds that we'll talk about later after the full practice problem, this is where the bank feed transactions could be matched up with. So we'll talk more about that in the bank fee transaction, but just note if you're going through the full process here, you're still going to have to go through the full process to track the receivable, and then think about how you can match up your bank fee data to the way you're doing the data input. Also note that if you are in a system where you're not doing this full process, I'm not doing the accounts receivable, I'm not doing the received payment, but just getting payments from the customer and recording them directly as a deposit, then if you want the simplest system possible and you're trying to make your books from the bank statements, then you might simply take your deposits here and record them as basically revenue, which will eliminate a lot of the detail you would have, because you might not have the customer information, or it wouldn't go through the accounts receivable. You're waiting for the deposit. But that would be one format that you can kind of use to do the quickest way possible to kind of construct your books from actually the bank statement. So, but that's not a full kind of accrual type of process, but just note you may end up doing that, and you may want that system if you're a small business and you're setting up your books here. Note that if you are using a system such as that and you're not going through the receivable process and you're just recording the deposits into the system and recording them as revenue, then even if you're not using the bank feeds, the record deposit might not be the easiest way to input the information. You might go straight to the register to enter the information. Or, in other words, if you're not recording something as a deposit that was first created from either a received payment or create sales receipts in which you are using the undeposited funds, or in other words, if you're not recording a deposit that's going to be decreasing undeposited funds because it's some other type of deposits, or you're not using the undeposited funds type of system, then you might not want to use the form directly, but rather use the register. That's what I will typically do. So in other words, if I'm recording a deposit that I'm trying to group together payments that had gone through the received payment, create sales receipts, and undeposited funds, I will use this deposit area so that I can utilize this little to item here and group the deposits the way I choose to group them so that I can line them up on the bank statement. However, if there's some other deposit, say I put money into my own business, then I'm not going to use the deposit form, although I could. I would rather use the register, where you can get to the register by going to the banking dropdown, and you can go to use register, or you can go to the lists dropdown, go to the chart of accounts, and I'm gonna maximize this item over here so we can see our open windows again. Let's like that, and then I'm going to double click on the checking account. So if I double click on the checking account, you can simply enter directly, and this looks like kind of like a checkbook type of account, the deposit, and then you would record the deposit over here. So for example, if I went all the way back up top to the transactions and I see a deposit here, this is like an owner. The owner put money into the company. I enter this directly into the register, and I just entered the owner as the name, and then and this checking account is decreasing the checking account, and the other side went into the other account, which I assigned right here, and that's it. Even if you enter it this way, however, you'll still see QuickBooks will still create the deposit form when you go back and drill down on the data. In other words, even though I didn't enter this into a deposit form, if I double click on this little deposit area, QuickBooks still created a deposit form. So although I use the register for the data input, QuickBooks still creates a deposit form and sees it as a deposit using the deposit form. So I'm going to close this back out, close this back out, close this back out. And then note that if we take a look at the process here, once again, we have the received payment. We have two items that have been recorded here that are in undeposited funds, either from the received payment or the create sales receipts, payments that were made from customers. If I click on that, and then we have our 2 items dropped down here. So I could group them together and deposit them in one lump sum so that they will show in that way on the bank reconciliation on our book. So when we reconcile, I'm going to close that out, not recording it. If I go back to a previous deposit, you'll see some of these transactions that have been done in this format. The top item has the checking account, and then we have the date of the deposit. And then in this case, these were created from items that would have been in that like pop-up window. And so I pulled these items together. Although these are payments from different customers, they're going to be deposited into the bank at the same time. Therefore, they will show up as this lump sum deposit of the $8,861.70 when we put them in our books, so that we can reconcile to what will be shown on the checking account, which will be that same number. So same thing here. You know, we got different deposits that were taken. So same items here. Although this one did not go through the undeposited funds, but directly to the accounts that will be affected here. So these ones are going to an account other than undeposited funds. So the transaction that will happen with a deposit is obviously the cash will go up. Typically a checking account will go up. This will be our main checking account. We only have one. The other one will be assigned by the transactions down here. So if you're doing a deposit other than taking it out of undeposited funds, you will create the account that it will be going to. If it's going through undeposited funds, then it will be automatically generated when you check off those items that were in that pop-up screen, and they will automatically be going out of undeposited funds because that's where they are. That's the default setting. So you don't need to enter these accounts. In that case, they will be entered for you. Closing this back out, let's take a look at the financials then. Reports drop down, company financial. Let's take a look at the balance sheet standard. Balance sheet standard, changing the dates up top from 01/01/21 to 12/31/21, and OK. And then the deposits, of course, will be in the checking account mainly. If I go into the checking account, there are going to be our deposits. Anything with a DEP is going to be the deposits. You could customize this reports and just search by type, which would be the deposits if you would so choose. Notice the cash account has a variety of different types of forms that will be affecting it because cash is going to be involved in some way, shape, or form in basically every accounting cycle, unlike basically any other account where that is not the case. So we have our deposits down below. Notice that this was our $65,000 deposit from the owner that we saw in the check register that I actually entered into the check register, not into the deposit form. But when I double click on it, it goes to the deposit form rather than the check register. The same will be the case with bank feeds. If you take the information from the bank feed and just simply add it to the system, it will not look like a deposit form when you add the bank feeds to the system. But when you double click on it or drill back down on it, it will indeed be a deposit form. So if I go into this deposit down here, we see undeposited funds, which is typically the other side of the system for most of the deposits we have, because most of the deposits we're going to get after having started the company will hopefully be from the customers and therefore go through this undeposited funds. So closing these two back out, the other side then will be from undeposited funds most of the time. And this will be the other side of the deposits, because this will be decreasing the undeposited funds. Undeposited funds going up with the payments that we have, meaning payments from customer for an invoice that went out in the past, or a sales receipt, meaning we sold something to a customer at that point in time, receiving payment at the same point, and then going down out of undeposited funds, representing cash like in our hands, like a check or cash, so that it can then go into the actual checking account. Closing this back out, note that if we had a deposit for some other reason, for example, the owner put the money in to the company, we put that deposit down here, that too is going to be in a deposit type format, even though we entered it into the register. The other side here going to the equity section. If I double click on it, then you can see it here in these the owner investment section, in the equity section, owner investment account, even though again we entered this actually directly into the check register.